All right, it's Tuesday, 8 o'clock. Actually, 11 o'clock. Sorry about that. It's 8 o'clock Pacific time. I'm in California, and it is 11 o'clock New York time. And we had a special chat room event today because of the United States elections going on. What we talked about in the coaching group over the weekend was sort of preparing ourselves for the possibility of trading on Tuesday with the elections. So we've finished, we've wrapped up in the chat room, and I've successfully walked my coaching students through a few small trades, nothing major, but I want to share with you through this free video, because I know a lot of people are watching some of my free videos on the website and also on the YouTube channel, and then they want updates. They want to know what happened later on, what happened with some of the other trades, what happened if they see some of the techniques that I talk about in some of the webinars. And I like to share, provide a little bit of feedback. Obviously, with free videos, you're only going to get so much information or access to so much information in real time. Of course, you're not going to get that. You're going to have to wait until after a lot of the activity, or after I have finished inside of the chat room working with coaching students, and then I'll take a few moments and try to wrap up an update video or something like that. So that's what I'm going to do here. What we're going to do is look at the euro dollar. If I seem a little bit distracted, I'm also looking at another monitor with some news and comments as sort of the night unfolds. And we did the same thing, with any major event, whether it's political or a vote or anywhere globally. I mean, we did the same thing with Brexit. We did the same thing with the the UK vote years ago, Eurozone crisis, whatever the case is, the United States. It gives us opportunities sometimes. So I will be trading live with my coaching students so that I can help them navigate through the choppy movement and then the comments, and should you follow it, should you not follow it. So a few hours ago, these are 1 hour candles. So a few hours ago, we had a continuation breakout trade here, and the next candle did not give us the 3 pip entry. It looked like a good continuation breakout trade. I'll go to that candle there. If you look at all the indicators, everything was lining up just right. So, but it did not give us the 3 pip entry on the next candle. Right there. That's the next candle. Now, I talk about there with my trading strategy. So I developed these techniques back in 2001. And as I started to use them more and more, I was always looking to improve my ability to execute these trades. So I developed techniques and methods to identify when some of these techniques won't work, when they could potentially fail. So for example, a continuation breakout trade, or if you're following along with some of the other videos, I talk about the HL30. The HL30 technique, a lot of people like that. It's easy. There's just one indicator. It's a 20 pip stop, 20 pip target. That particular technique, a lot of people like it. They say it's very easy, but it could fail. So I developed 3 different ways to identify if an HL30 could potentially fail. And I sort of use that to screen each one of my HL30 opportunities to decide if I should take the trade or stay away from it. Again, there are times when the HL30 could fail, so I have 3 methods to stay away from it. The same thing with the continuation breakout trade. With the continuation breakout trade, even though I talk about how accurate it is, it also falls on my responsibility to make sure that I'm using it under the right conditions, and I'm paying attention, very close attention, and to stay away from the trade if things just don't line up. And again, I have those methods to screen these trades to determine could it potentially fail, or is it likely to succeed. With a particular event like this, and this is something that I talked about, and we've been talking about it for the last couple of hours in the chat room. With a particular event like this, we really have to take into consideration what we're trading. We're trading the reaction to news as it unfolds. And that can create some real problems when you're trading. Sometimes you get news as it is unfolding, as it's being revealed, as it's being released to the market, and it will continue to trend for the next 2 or 3 hours afterwards. And then other times it'll act just like it is today. It's very confusing, or tonight, I should say. So it can be at times confusing. It'll move up, it'll move down. The ranges are big. People are overreacting. If it's not working out the way they expected, they're cutting off the trades quickly. It's going to accelerate some of the moves to the opposite direction. A lot of things can happen here. So there's a lot of trader psychology that goes into trading in an environment like this, understanding the behavior. And this is very common. This is very typical with events like this. So it's important, again, that I be there with my coaching students in the chat room to really explain a lot of this, because I've seen this pattern. I mean, since 2007, since 2001, I've traded all of these events. And then since 2007, when I opened up my first chat room to the public, it's always acted this way. I mean, price has acted like this. It's either going to be a solid event and news that hits the internet, right? The market, everybody can collectively trade it. And there is no mistaking that price is going to go in a particular direction for a breakout, and we can trade it to the expected take profit level. For example, the continuation breakout trade here on the 1 hour time frame for the euro dollar, we would be trading it to a 55 pip take profit level. So with certain types of events and the outcome, if it's solidified, if that one release of the new, that moment that news is released, that statement, if that's the end of it, and there isn't any other speculation, there isn't any other components that will add to it where it starts to go up and people are going, okay, well, Republicans have this and then Democrats have that, and then it starts to move up and down. You get my point, where you're going to get those conflicting signals, and it takes a little while as the time passes. So we get a signal candle, and then the next few hours it releases more information. We have access to more information to make that decision, and that's that market reaction at the same time, versus an event where you get a vote or you get an opinion or whatever the market's waiting for, and then that's it. There's no mistaking. We know it wasn't a rumor or a false statement. It is clearly what it is, and then everybody trades it, and we're going to get a solid move that continues. That's the difference. We're trading updated comments and statements throughout the night, throughout the last few hours, as this is all unfolding and being released to the market. And we're going to see this kind of pattern and this kind of behavior. So you have to take your trades very carefully. Going back to the methods that I have, or that I developed to determine when certain trades could potentially fail, the continuation breakout trade using that 3-pip entry method. I say this all of the time whenever I talk about the continuation breakout trade in these videos, that the 3-pip entry method, that using that strategy, that will keep me out of trouble every single time I use it right and I'm using this technique correctly. That's exactly what happened tonight. So we had a continuation breakout trade here. Sorry about that. There, that's the signal candle. All the indicators lined up. You get the news, okay? We still know, even when that candle closes, there's going to be more news released over the next few hours, and it could offset the direction of what we expect. However, from a technical point of view, I still need to wait for the 3-pip entry, which means price has to go up 3 pips higher than that signal candle. And on the next candle, it didn't do that. It only went up 2 pips. Using that 3-pip entry, and this happens over and over again when this behavior occurs. When you get a breakout to one direction and then it collapses and goes back down inside a consolidation and reverses, it could or would stop you out if you used the wrong entry. So that's what I'm getting at. This pattern repeats over and over and over again, where the 3-pip entry keeps me out of trouble. Sometimes it'll move up 1 pip above the signal candle high, maybe 2 pips above the signal candle high, and then that's it. And it rolls right back down and goes the opposite direction. And I never go long that pair, because if I would have gotten in right on the close of that signal candle, and then I tried to use like a 55 pip stop or a 35 pip stop or whatever the case is, I would have been stopped out. But then again, I knew in the back of my mind that approaching this time frame, when the elections were going to be reported, I knew that this type of behavior was likely. That's the other thing you have to keep in mind, is the fundamentals and then the technicals. So back to the technical side, the 3-pip entry will keep you out of trouble. I teach my coaching students exactly how to do this because it's critical. That's one of the 3 methods to prevent getting into a head fake or a false breakout. The first one is the fact that I'm just using a 3-pip entry. There are other ways to determine if it's going to fail, but that's one of them. And that kept us out of trouble. Now, That's the signal candle right here. That green, this candle right here. That's the continuation breakout signal candle. But the price swing that created that breakout is right here. We get a dip low, and then it moves higher, and then it dips down again, and then it starts to move up over the last like 7, 8, 9 hours there. So that's the price swing low that created the continuation breakout trade. One of the ways that I would cancel the possibility of going long if price eventually turns around and goes back up and takes out the high of the signal candle by 3 pips is if, and this would cancel the trade, the continuation breakout trade, if price comes back down and takes out the price swing low that created the continuation signal candle. So that candle right there took out that low right there, and that canceled any possibilities of me going long this pair. At that point, it's just confusing. Now, we did have a small trade to sell on a 30-minute time frame here as it was printing the Tech 1 trade. Tech 1 trade is another technique. It's just a reversal, but we're using different targets. We're using different stops. It's not like the continuation breakout trade. What I want to point out, though, is that lately in these videos, I've been talking about the continuation breakout trade quite a bit because we've had quite a few of them. And this set up like a continuation breakout trade, but it was not it wasn't the perfect entry. Everything else was lining up okay, but you have to step back and ask, why is price moving? Very often when I have an exercise where I look for the continuation breakout trade and I practice the continuation breakout trade, and I teach my coaching students to do it too. But we're not looking at the news. We're just moving one candle at a time, and it helps them distinguish which highs and lows are appropriate to identify or signal a breakout that would put you in the path of that trending move afterwards. You need to know which highs and lows are appropriate for consolidation, because some consolidation ranges and some highs and lows aren't going to give you the same results. It could still be a head fake, so you need to know which ones to use. So by using this exercise, you're looking at closed completed candles, and obviously you're not reading the news, you're not looking at the news, it really doesn't matter. You're just looking at the technical side first. You want to get that pattern recognition. But again, even if we didn't have access to the news and we didn't know what was going on right now, we were just doing an exercise where we picked a chart and went back in time and started moving one candle at a time, and here we identified the continuation breakout trade. Again, the 3-pip entry would have kept you out of trouble. And then the fact that it slid all the way down, price took out the price swing low, the low of the price swing that created the signal candle, then it's canceled anyway. And then you just stay out of trouble. It is choppy, and there's quite a bit of movement, and a lot of people want to take some of that. But just because it's moving up and down doesn't always guarantee that you're going to make some profits, right? It's kind of difficult sometimes if you don't know where it's going, why it's moving, where it could potentially stop, how long should you hold on to your trade, and when should you get in it. If you're scalping and you don't have a precise entry, and you don't have a precise take profit level, it's going to be a little bit challenging to do, right? You're always changing based on just, sometimes, like I used to do that. Back in 2001, when I would scalp during events like this, I was just looking at the money in my trading platform, and that's not the way to do it. But that's what I was using as a measure of when I was comfortable to get out of the trade. And sometimes you end up holding too long because you're not making enough, you feel like, right? So you get my point. You don't want to do that. So here we are live. It didn't surprise me that once we shorted it and we took it to a specific take profit level, like a psychological level inside of this range, we don't want to hold on too long. And then it turns around and goes right back the opposite direction. But it still has not printed the 3-pip entry. However, even if it does, because price went down and took out the price swing low that created the signal candle for the continuation breakout trade, it's canceled anyway. So now we're just going to leave things alone. At this point, things might settle and go sideways. We might get another spike with a comment or rumor or something like that later on. But for the most part, it's just a matter of now waiting for a high to settle in and a low to settle, and then maybe box in a new range of consolidation and then look for another breakout. We did the same thing here with the dollar yen. So the dollar yen very often is hypersensitive to economic data. Not always, but very often. So we had, originally, I'll go ahead and open this up and walk you through how we traded this one. Originally, we had the low of consolidation here with this week's low, and then that was the continuation breakout signal candle to the downside. Now, the first thing, if you're following along with, and you've watched some of the videos and the trainings that I've released, I talk about consolidation and how critical it is to know which lows and highs are likely to signal the possible breakout and then the trending move that develops afterwards. You have to know how to find those. But one of the things that I learned about consolidation when I put together this strategy back in 2001 was that if the range from the high to the low of consolidation is too small, very often it will lead to head fakes just like this. And it's not going to give me a reliable signal anyway. So what happens is, as time passes, and this range right here, 113.06 and 113.50, that is too tight. For a continuation breakout trade, even if the indicators confirm, that is too tight. Very often it would lead to a head fake move like that. However, even though that candle closed below that support level and the range was too tight, that means it's not, to me, a qualified consolidation range, so I still need to wait, but it did not print the 3-pip entry anyway. So I wasn't, I was never at any point analyzing this information here, and then of course realizing why price is moving and what we're trading, the environment, right, this election. I was never considering trying to sell this pair, knowing that this was probably likely. But even so, if I'm going to trade it back up, I'm going to trade it as a Tech 1 trade off a bounce and then target a psychological level in here. And here the range is so small anyway, it wasn't likely that it was going to go very far. I have to be careful with it. I need to lock in profits. I can't just get into the trade and think, okay, well, if it didn't work in one direction, maybe the next direction is right. John Bollinger talked about that. So I learned how to trade the breakouts from him. I mean, it's not like I sat with him one-on-one. I attended one of his 3-day weekend events in Los Angeles, so he talks about, and I remember him specifically saying that very often, just because it breaks out in one direction, you would think maybe the next direction is the right direction. And typically it will work out that way. But you have to prepare for the fact that that isn't always going to be the case. So what you do now isn't something that you can always duplicate except for the structure of your trade. So you've got to understand that market behavior, price action, it'll do this. It's going to break out to one direction. That's the failed direction. And then it breaks out in the opposite direction. And then that ends up not going very far. And then it collapses and turns around and comes back the opposite direction down here. So it's almost like it goes in 3 different directions. That does happen. It doesn't happen all of the time, but it does happen, and you've got to prepare for it. And this, again, understanding what you're trading in, like what are you involved in? Why is the price moving? What is going on? Do we have, again, going back to what I said earlier, do we have one report or the release of a decision that's the end of it? It's fact, and there's not going to be any additional reports or updating to that information? Or are we trading updates like this? So when we traded the presidential election a few years ago, when Donald Trump was going against Clinton, there was updates as some of these states were, in favor of one or the other, and then we got another state that would, the polls were closing and things like that, and they were totaling the votes. As that was happening, we would see some pullbacks or some activity like that. So you know that there's going to be more data throughout the night or throughout the next few hours in a situation like that. And then other events are just a solid, this is what it is, and there's no mistaking that information, and then you can trade that. So again, going back to this, you've got to be careful. But now, and this is sort of like what I pointed out here a moment ago on the euro-dollar chart, now I'm just going to wait for a solidified high and then a new low and then box in a new range of consolidation. Well, initially, for most of this week, the dollar-yen was in a tight range of consolidation. I'm not comfortable with that for a breakout. I need a bigger range. So now that we have this spike, even if I didn't trade anything in here, that's okay. And very often I'll say that sometimes there's price movement, and I can see where it's likely to go. But if I don't completely understand it or I'm not comfortable trading it, then I'm just going to wait for price to move around. Let everybody else move it around. Let price move around wherever it's going to go. Let it settle. Because at that point, eventually it's going to give me an opportunity to take my trade, to box in and do my technical analysis the way I like to do it, what makes sense to me on the charts, and then it's going to make sense. It's always going to come around. It's always going to come back. It's always going to give me an opportunity. I just have to wait for it. So now we're going to make an adjustment to that support low, and then we're going to make an adjustment to that resistance high, And let's take a look at that. That's 113.80 approximately, and that's 112.95. That's good. I like that. That's not too tight. Now, if a 1 hour candle closes outside of this range, and then the indicators confirm, and then if it happens with, let's say, some news during maybe the New York session, where again it's definitive, right? That the release of that economic statement is what it is. There's no changing it, and then we can trade. So if let's say a particular news event creates the breakout, I'm sorry, I'm reading at the same time. It creates a breakout. We know which direction to trade it in, if that's in fact what we have, along with the technicals, which would be to look at the Bollinger Bands first for confirmation. They've got to be separating away from each other on the breakout, and then of course looking at the CCI and the MACD histogram. This RSI, I've had it on there because I was doing a training, and I just kind of left it on there. It was another strategy using the RSI, but I don't incorporate the RSI with the continuation breakout trade, so I don't want to confuse anybody there. But here, now we have a new consolidation range. I'm comfortable with this. This is good. This is not too small. This is appropriate as far as the distance from that high to the low. This is a good consolidation range. Now I just need to wait. So even if you didn't trade this, you did okay. You stayed out of the possibility of going long when you saw it and then having the whole thing collapse and rolling back down. Some people, if they scalp it, I guess they're okay, right? If you get in and get out quickly, you're okay. But if you get in thinking this is it, it's going to be a breakout, whether it's to the downside or the upside, and then you hold too long, the whole thing goes right back where it started. So be careful, be really careful. But this is exactly what I walked my coaching students through in the chat room just a little while ago. Pound dollar, again, same thing. So the pound dollar, we had a continuation breakout trade earlier, and it already hit its last 55 pip take profit from that continuation breakout trade. But at this point, I'm not comfortable trading it any higher. I'm going to wait for another range and look for a breakout, or look for a solidified support level and maybe trade some kind of a Tech 1 bounce off of that or something. If that happens, I'm thinking forward. I don't know that it's going to happen that way, but if it develops that way, that's what I'll be looking for. Otherwise, I'm just going to leave this one alone. We've traded the continuation breakout trade a few times, even last week over here. So we traded the continuation breakout trade here on the pound dollar, 55 pips, and then we traded it again 55 pips this week. We also traded the pound yen. For those of you who weren't watching, the pound yen, I don't even know if I have this chart set up right. I change different platforms to show different things to different students. If I'm making a video, I try to leave it and pick up where I left off, that kind of thing. So this is the pound yen. For those of you who have been watching some of the videos on the breakout, this paid 250 pips on the breakout, but it actually took until this week for it to hit that final 250 pip take profit level from the breakout of last week. And this was the breakout that set up on the pound yen at about the same time that the breakout last week here developed on the pound dollar. You might remember that was, I think it was like 12 midnight for me. I'm in California. So it was about around 3 o'clock a.m. New York time last week. It started off with some statements about the possibility of reaching the Brexit deal. And then afterwards, it kind of went sideways a little bit there, but then it picked up more momentum as there was more comments about faster paced interest rate hikes. And then it just kind of took off, and then we've been trading it in this upward direction and this trend ever since. So I'm done. I'm not going to chase this one any higher. I'm going to be looking for another opportunity, or maybe switch over to a larger time frame, something like that, and then look for an opportunity there. But at this point, I'm done with the pound dollar. I'm done with the euro dollar. Not doing anything right now. I'm done with it now. Not trading it. Maybe until later on. And then what was it? The other one here was the dollar yen. Dollar yen, again, now I've got a good range of consolidation. I like this. I like to box in. I refer to it that way because that just makes sense to me. That's the way I like to see it. And yeah, this is a good range. So hopefully we'll get a breakout sometime this week on this pair. If not, and it just moves in sideways consolidation throughout the rest of the week, I don't care. Eventually it's going to break out. It always does. That's just what happens. There's no way this pair is going to sit in this range indefinitely, right? We all know that. We just need to wait for the catalyst, that event that causes the breakout, and then I just need to follow along to make sure that I make adjustments. So that's it. We safely traded short, small trades here. euro dollar tech 1 reversal, and stayed out of trying to sell on that continuation breakout trade because it was just too small here on the dollar yen. And then the tech 1 trade back up, and then that's it. We're done. We don't want to hold on to these trades indefinitely. Remember, we're trading inside of consolidation. We've got to target psychological levels.